I just want to say for clarity, like, I'm not the person to go to for tax advice, but I do my own taxes. Like, I've gone up against the IRS and I have won. From 2016 and earlier, you were able to write off your tools as a tax deductible item because it would be pertaining to your job, and this was much easier to prove if you were on a 1099. One of the long-running problems with the United States tax code is that it's very complex, and because of that, most people will go to like TurboTax or H&R Block. Once Trump got into office, he made some reforms to simplify the tax code, which was actually pretty good. Say whatever you want about Trump, that's my truth. My tax returns were never better. But for every action, there's going to be consequences and unintended consequences, in which that would be tool tax write-offs. You couldn't do it anymore. The tax code was simplified. Apparently, coming 2023, there's going to be a couple new changes. If the tools were purchased more than a year ago, then those assets would qualify for depreciation. And those tools, I think you're going to be able to claim depreciation for 3 years in a row, but each time it's going to be diminutive returns. If you look towards the middle, after 2023, this is scheduled to phase out by 20% each year and end altogether after 2026. So in short, yes, you can claim a deduction for your tools, but you've got to be on top of those receipts. You got to know how old those receipts are and how often you have claimed on them. And I think a lot of mechanics will agree, paperwork is not our strong suit.